Hello everyone and thanks for joining me in Fundamental Signals. Now I believe NVIDIA has a lot of room to grow and I'm going to show you why and how. First, let's take a look at NVIDIA P to E ratio versus its 2-year average. This has been a great indicator since 2000, right? It's been 26 years that it worked well for NVIDIA. Look at this here. Whenever NVIDIA P to E ratio compared to its 2-year average dipped below -1 of its standard deviation, right? So you get the average of 2 years and then you see where you are compared to the 2 years. And then if you're below -1 standard deviation, you take 1 standard deviation, 2 standard deviation. If you're -1 or -2, that's where you know you're undervalued. Look at this. In April of 2002 up to January of 2003, this P to E ratio was in below -1 zone. And you see the price was dipping here, right? And as soon as that P to E ratio come back up from -1, the price rallied up, right? It goes from, what was the dip here? Like around 0.07 to I think $1 right up here. No, sorry, 0.21. So 3 times, right? 3 times. Another one. We have some small ones right here, right? From July 2005 till like, I don't know, around 2005, 2006, we had these dips. And we also had another big one from, from October 2007 all the way down to November 2008. Now, from November 2008, we see this P to E ratio coming back up, and that's we have a rally, right? So same thing here. More recently, we had this in 2002. The whole year, the price was going down, and as soon as this indicator turned back up above -1, the price started rallying, and it rallied a lot. So it went from $14 all the way to, what was the top here? I think it went up to around 100 or 120. Now, recently, we had this one, right? So we are here now in from February 26th of February 2026 up until April, we were in this green zone and we just broke above it. We broke above it. Now we have another price correction today, April 30th of 2026. We closed at 199.5. But I believe because we passed that -1, it's time for the stock to rally. So we see we pass it here as well. But again, we pass it again. So each time that we crossed above, let's see what happened. So let's check the crossover strategy whenever we crossed up from below -1. And let's say if you waited up until the indicator goes to 1, right? Cross up from below to 1, and then you would sell the stock. What would be your gain? So 33%. It happened 56 times in the history of the stock. There were times I would lose money, but most of the time it would gain, right? Now, that doesn't mean you have to sell it at the time. It just means that you have better chances of winning than losing. Another indicator, EV EBITDA. This one, again, shows the same thing. Right now, we are crossing back down to below 1. So this one is reversed. So whenever it's up, it means it's time to buy. right? So we see here, 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 and here. Even more recently, um, we had it right here in 2005 after the tariff drama, and then as soon as this going back down to below 1, we start having this big rally from, let's say, from 144 rallied up to 100, 200, right? 200. That again happened. We were in this region and we just dipped below 1. Right now is 1.16 because of today's correction, but I believe it can go higher based on the history and based on what we see from this indicator. Now let's check that indicator. So let's do a custom strategy, crossover, cross down from above 1, and then cross down from above -1. Yes, this indicator actually gave us better return. If you follow it, it would give you 50% return historically. It happened 43 times, and the average of 43 times is 50%. But the wait time is 669 days. So it's almost 2 years, but after 2 years, you're expected to gain 50%. Now, there were times that you would lose more than 15%, like 7% of the times. But other than that, you would win, right? So historically, we are in a good spot, I think. Another thing I want to show you, this is called revenue momentum oscillator. So what it shows is how far the price is behind compared to the revenue growth, right? So if the price is lagging behind, this indicator shows green. If the price is getting ahead of the revenue, the indicator shows red, right? So let me go to the log scale. All right. Now we see the same thing. Whenever we're in the green zone, if you DCA into this green zone, you get very good return. And you can see average days that this trade would have taken in history. But you get 41%, 51%, 68% return based on where you do this DCA. Right now, this indicator is showing 16.5. So it's basically above 10. So we're in this region. So if you DCA into the stock right now, out of 10 times that it happened, 9 times you would win. Like you would get a return, a positive return on your money. And only 1 time in the history of the stock, it did not work. So odds are in your favor. Now, lastly, I want to show you this revenue and revenue forecast. So we can see this kind of perfect correlation again between the stock and the revenue, right? This is going back to 2013. 2013 up to now, you can see the correlation. It's perfect. Now, the good thing about this is the estimated revenue still going to go up. And it's going to go up by 35%. So right now, what's the revenue? Revenue was around $68 billion, which estimated was 66. So it beat the estimation, and it's going to go from 66 to $113 billion. 113 minus 66 divided by, let's see what that is, divided by 66. So 70% increase in revenue. 70%. So if the correlation holds, you should expect around 70% return in a year from now, right? Again, if the correlation holds. Sometimes it doesn't hold. Sometimes for a year or so, you will see a divergence, meaning revenue might go up, but the price does not go up. So keep that in mind. But overall, things are looking good for NVIDIA. I expect the prices to go up, and yeah, so all the metrics here looks fine. I hope you like the content. Please give me a like and subscribe. Thank you.